Dear friends, we have been saying the inventory management. As I told you last time, we have so many techniques to control inventory management. One such technique is ABC technique, very important technique. ABC stands for always better control. So his life also is very important, this ABC analysis. If you have the four problems which are classified according to urgency, the first problem is very urgent, second is less urgent, like this. If you categorize and if you start attending the very urgent subject a problem, and you'll be able to solve the problems one by one. Likewise, also in your family, we have four children, and all the three are studying well. One is not doing well, and you can focus on the child which is not having a good performance. You can focus on him, and all the four will study well. Like that, this ABC techniques we have three categories: ABC. ABC means in the sense the top 10 items, volume is the volume, the 10 items is having a value of 70%. Okay, total value, after total value, it has got the 70% value. Okay, then again, B category, 20% units, this is volume. You got a value of 20%. Let us say 100, out of 100 items, 20 items are there in B category. The value is 20 rupees, let us say. Then again, 70 items are there in C category, but thing is, it is got only 10% value. So you are dividing your stock into three categories. One is top 10, which is having highest value at 70%. Okay. So second B 20 items is having a value of 20 rupees, 20%. And 70 items, it carries only 10%. So if you focus on this A items, high value items, 10%, then value will be 70% of the value will be controlled, it will be managed, so that we can avoid the unnecessary cost. Because it counts very much because it's very costly. Most of the funds are blocked, capital is blocked in that A item only. So everything matters here, A. Even this C category, 70 items, it carries only 10% value. So even there is some loose estimation or loose monitoring, but still it's not going to cost you much because amount in more money blocked in that category is only 10%. So this is very important. So by focusing on A, you'll be able to control major costs associated with inventory. So I already told you there are two costs. One is that carrying cost, and this ordering cost. So these two costs will be controlled if you're managing the A. It will take care of 70% of your money blocked in that current assets. So very important. So by controlling this A, you'll be able to control maximum of the inventory because while value is more. Even 70%, 20% also a little more than the C, but it is not compared to A. Compared to A, it is less value. Less value. Only 20 items will cost 20%. Okay. So now how you have to control this? This is very important. So A items, let us say, you should have a tight control. You should have a tight control. And you should not, there should not be any laxity and there should not be any relaxation in this A category. And you should make correct estimates. Because if you make error, then your money will be blocked up, or essentially goods will not be available for production or for sale. So you have to be very careful. So rigid estimate of base requirements. Then you have to watch very closely. You have to watch very closely how much stock is moving out, how much stock is coming in, what has gone to the production, what has gone for sales, and what is left out, what went to order, reorder, etc. So very important. Then again, it should be managed by top managers, not by, you cannot delegate this to your accountant or your gumasta or your clerk, because it should be managed by top management, by a responsible person, because it involves a huge amount of capital in this category. Okay. Then you cannot afford to have huge safety stock because it's a question of cost. Okay. Everything is a cost. It's a question of cost because it is, you can afford to have only low safety stock. You can afford to have only low safety stock. Like coming to C items, as I told, 70 items cost only 10%. So Ordinary control measures, you do not have to make any extra caution on this. You can just make an ordinary control. Then purchase based on usage estimates. What the last time you have purchased, what you are going to get, how much they will be sold, and you can make an estimate. And then you can make a rough estimate and you can order it. Okay. Then you can have high safety stocks. High safety stocks means you can keep any number of items because money involved is only 10%. Though it is 70 items, money involved is only 10%. So, like for example, safety pin, clip, etc. All you can have a number of items. You can have more a rough estimate. You can order more. You can keep more safety pin. You can more clip. You can keep because its costs very low. So you can keep it. B items you can have a moderate control in between these two. You have a moderate control, and the purchase based on rigid requirements. So you should at least because it is still costlier than C. You have to make a rigid estimate. You can make loose estimates, rough estimates, and then reasonable care is required. Reasonable care because money little more than C items, so reasonable care is required. Then it is managed by middle management. You can entrust this job to your accountant, your gumasa, your clerk, who can monitor these things and assess the requirements. You need not be. It need not be seen by you. It need not be seen by you. Only if you concentrate on the A items. So by focusing on A, by closer control of A items, most of the investment cost, carrying cost, ordering cost will be avoided. Thereby, you can improve your profits. So please take care of this. This is a very important technique. We will work in the next session. We will work out the some examples so that you will understand this. Till such time, goodbye. All the best.